morning, Patreon subscribers. So we'll start with gold because it gets requested. I don't mind doing requests at all. So if there's anything that you want us to look at, let us know. I will not mind at all. Gold is been quite a bit of a pickle, but we have to remember we are a buy at the static. However, they are going long. So that's a little bit of a concern if you're long, and you've got to be careful if they're sort of joining you in your bias. So I'm leaning towards bearishness because of the technicals, but we have to remember the sentiment's probably more powerful than the technical in so much is that it will ignore levels and it will just try and seek liquidity, because that's obviously a huge driver and a goal and a target for, you know, the big banks and the big fish. So it could be that the sentiment's just simply much more stronger than the technicals, and it might be just overlooking those technicals. We made a very overextended hourly pitchfork. So technically speaking, you know, we could probably be selling off, but sentimentally it's looking okay. The profitable traders are long, and they have been for ages. They've held on all this time, and so that's good for them. We've also made a bullish candle as well. So let me draw this box, and you'll see they pumped a lot of money in for longs on this candle, and there's a $12 move in that 1 hour. Okay, so that's that bullish candle. Tells us institutional buying and selling. This is them pumping gold. So this zone could hold. If we go below 1921, then it looks likely the SLC 1911, but that's going to probably hold as a support. Okay, and so be careful. And so we'll go and look at our major pairs. Remember, the Aussie is strong and the dollar is actually quite weak. So that's obviously going to impact gold as well. So let's have a look. So there's your daily open. Your weekly open's down there. We have exceeded the ATR for the week, which is of note. So we can maybe have overextended a little bit from an ATR view. The SLC 71.40 and the one below 70.30. And it looks like it just wants to take stops out, and GU did it as well. If you remember yesterday's video, I was saying that was going to happen, and I nearly gave it like a 100% guarantee. I was really sure this was going to happen, and we shot up, and you know, to take stops. There isn't really that much reason for this to rally fundamentally, just apart from a softer USD. So that's that logic. So one above is the new one is at 124.50. One below is at 122.49, and it's also the ATR short. So there's a confluence there. See, this whole behaviour here just want the rent stops, I think, and it did exactly how I forecast yesterday, where it looked like it was potentially going to fall. They reversed it and repumped just to take that liquidity. So there are quite a lot of stops still up here. It might want to take that one. Potentially. So a lot of naughty stuff going on right now. It can wear you out as well mentally. So you're going to have to sort of be prepared to be, you know, to be strap on in the roller coaster, because it can be quite like a tumultuous affair. It's not particularly easy or enjoyable, some of these moves, because you know what's going on, and it's just really cruel. 109.30. and 108.30. So we are a buy on EU, MR2, MR1, so between those two values, and potentially, because that's a lot smaller than this one, we could maybe argue with taking the stops out. They're quite happy with that potentially, and they want to get that one. And then this one here sticking out quite a lot, so potentially that's what they want. And that's just horrendous, isn't it? It's quite tiring, but as long as you know where your targets are and your bias and things. The thing is with the EU, the Euro USD, we are sort of consolidating and ranging, so it's quite hard to trade if we're ranging. Okay, admittedly, we are trending higher, aren't we? This bit was ranging, then we had the breakout, came back in, and we pumped, had another test, and then we pumped. So we had 3 tests on that range high. See that level there? So technically, okay, so we had a breakout, multiple tests, well, 3 tests, and a bounce to take liquidity in the process. So let's look at the dollar. And I'm looking forward to the weekend actually. Let's see what happens. So dollar yen, we zoomed in a lot. Okay, so the one above is at 130 on the dot, and the one below is at 128.90, and we are a buy actually, but we're below 50%, so we are a buy. If they go long, then we'll fall. Okay, so just keep an eye on that. Weekly open, above weekly open SLC, below weekly open SLC, and you see how they're quite close, and it might just want to take both. Dollar Swiss. And so we should be falling on this because they're very long, 76%. And weekly open is of note. So we started the week, did this big chop, come back down, and basically where we started the week. Weekly open and daily open at the same level-ish. So that's of note. Above that, we'll target the SLC, which is miles away. But really, they are really long. So we probably shouldn't be coming up with there, but we've got the weekly and daily open, so there's a reason for that. You know, they pumped that, so we're above the WO and DO, and one below is at 91.50. Let's look at dollar CAD, and remember the CAD should be fairly strong because of the oil and the reopening of China and stuff. So what's that level? Support 1, okay. 133.82, and SLC below is at 133.20. The SLC above for UC is too far away, so I won't show you it. But the level of note there is your support. So you know, if we've got monthly support, we create a new candle above. You could use that as a stop loss for a long. But we are currently a sell at the big picture. They might sell it. I mean, might cross to 50%. So, so just to wrap up, I think everything's pretty much a liquidity probe right now, and it's just wanted to take stops out. And I suppose you could argue there's so many retailers in the casino right now, they could probably do with a flush out because there's probably too much dumb money out. So this is a speculative stop hunt. So we've exceeded the 423.6 fib extension, which I'd never seen before on a pitchfork. And so really, normally we sort of, normally we come to an end of a journey, and then, it waves down, and then, we wave higher, and then, come down. But we carried on pumping, and the reason for it is the stop loss clusters, I think. And they just kept pushing their stops higher and higher, and 1972 is of note because our stop loss cluster is 1970. So if we do go up there, that's going to be a decent resistance, potentially a good level to sell, to target the bottom, the lower support there. So be really careful, and also know where your stop is as well, and don't move your stops, because what happened here is that they had moved their stops higher, and it went up to just really to punish them. So this is clearly a stop hunt, I think. So be careful, and just remember, if you do get stopped out, don't worry about it. We got stopped out on dollar yen, and it's a good job we did because it continued to fall. So that's good, right? So you just know where your exit is, and you should be fine. And trade small, because things are just probing liquidity, and you don't really want to be in that sort of metric where you're getting probed and liquidated. It's not fun at all. So there's your levels for gold as well, technical levels. Ion 1943, resistance 1950, support 1936. And remember that we've got that bullish candle here as well, which I showed you in the gold forecast on the better volume. So be careful, and I'll speak to you guys soon.